Good afternoon, everybody, and thank you so much for joining us live for our latest anti-money laundering webinar. I'm Lex Jones, Director of Anti-Money Laundering here at the SRA. Now, by popular demand, we're holding this AML webinar for sole practitioners. We absolutely know that balancing anti-money laundering compliance and the day-to-day running of a business can be really challenging. So this webinar is designed to provide answers to the questions we get asked most by our sole practitioners, to share some myths and common mistakes that we see, and provide guidance on how you can stay on top of your AML obligations. And perhaps most importantly, you'll get a chance to put your questions to our team. And speaking of team, I should probably introduce a couple of people. Now, today I am joined by Declan Brown, AML Regulatory Manager, and Victoria Wakely, an AML Associate. Both of them work in our proactive supervision team. Now, the way this session is going to work is that we'll start with some updates from Declan and Victoria, and we'll then come out to you, our audience, for a Q&A session. If you want to submit a question, you should be able to see a link just underneath the video here. You type your questions in there. You can add your name, you can remain completely anonymous. It's up to you. I will say though, please don't be shy. Please do start submitting questions as they come to you during the session, and I can then start putting them to the panel just as soon as the Q&A opens. I will remind you all, we can't answer specific circumstantial questions, and we can't answer questions about individuals. So please do keep them general. Otherwise, we'll get through as many questions as possible. The only reason I might not ask yours, I guess, is if we've already had that question asked and answered at some point during the session, and I'm just trying to get through as much as we possibly can. But that's definitely enough from me now, so I'm going to hand you over to Declan.
Thanks, Lex. So before I touch upon the work that we do within the anti-money laundering proactive supervision team, I thought I'd just give a bit of an introduction into today's webinar. Now, as Lex mentioned earlier, we recognise sole practitioners face slightly different challenges to larger firms. So the purpose of today's webinar is to really share some guidance to help sole practitioners comply with the money laundering regulations. We'll touch upon some of the good and bad practice that we've seen through the course of our engagement with the profession. And we'll also have a chat about some of the common misconceptions that we often see through our work. Now, before we go any further, I thought I'd just touch upon the SRA's role in tackling money laundering. Now, solicitors play a key role in keeping money launderers out of legal services. The National Economic Crime Centre estimates that nearly £100 billion is laundered through the UK each year. And I think it's fair to say that some of these funds will pass through solicitors' accounts at some time or other. So we need to make sure that firms are doing all they can to prevent money laundering. During today's session, you'll hear us refer to the money laundering regulations or the regulations or the regs or the money laundering regulations 2017. Where we do, we are in fact referring to the money laundering, terrorist financing and transfer of funds information on the payer regulations 2017. So we supervise nearly 5,600 firms for the purposes of AML requirements, of which just over 1,000 are sole practitioners. We're appointed a professional body supervisor, or PBS, under the regulations. And as a PBS, we're required to make sure firms have the appropriate controls in place to prevent money laundering. As a PBS, it also means that we ourselves are supervised by the Office for Professional Body Anti-Money Laundering Supervision, or UPBAS, as they are also known as. And UPBAS oversee all PBSs and ensure we are taking a robust and consistent approach to supervision. To help us meet our obligations under the regulations, we carry out both on-site anti-money laundering inspections and anti-money laundering desk-based reviews at firms. Now, this involves us looking at the core AML controls firms have in place to prevent money laundering, which includes, but not limited to, the firm-wide AML risk assessment, AML policies and procedures, and we'll also look to review a sample of files. In the case of on-site inspections, we'll also have a chat to firms about any other controls that they may have in place. Where we identify good practice, we will take this away and we will share it with the industry. And where we identify any weaker areas or areas where firms are perhaps struggling, where we can, we will try to work with firms to help improve compliance. We've included a link on what to expect during an inspection, and this will feature under the resources tab, which will accompany this webinar on our website.
Thanks, Deck. Let's kick off by clearing up some of the biggest myths. And the first one we hear, it comes up a lot. Well, it's just little old me. I work alone. Surely all this AML stuff can't possibly apply to me. The truth is, it absolutely does apply to you. The money laundering regulations don't come with a small print saying, except if you work on your own. Nope. Whether you're a massive law firm in the city or sitting at your kitchen table with a laptop and a kettle, the regulations are the same. Now I get it. You're probably thinking, but how on earth am I supposed to do all of this on my own? Well, the good news is compliance is proportionate. That means no one's expecting you to have a department of 20 compliance officers or build a fortress in your back garden. But, and it's a big but, just because it's proportionate does not mean it's optional. The rules are still mandatory. It's not a pick what you fancy buffet. It's like Brussels and sprouts on Christmas Day. You might not like them, but unfortunately, they're still going to be on your plate. So, yes, it applies to you. And yes, you have to do something about it. But don't worry, because that's why we're all here today, to break it down and to make it manageable. This is another common reoccurring myth. I've known Bob for years. He's like family. I don't need to do all that formal ID stuff on him. I hate to be the bearer of bad news, but friendship, no matter how long standing, is not a compliance control. I know it feels awkward. You've known him or you've known them for so long, you probably know their dog's name, their favorite biscuit, or exactly how they take their tea. But the regulations don't care about any of that. There is no provision, none whatsoever, to skip client due diligence just because you have that personal or long-standing relationship with the client. It doesn't matter, if they've been your client since the days when fax machines were cutting edge. You still need to carry out formal, documented client due diligence. Now, of course, your decision making as to whether this client needs simplified, standard, or enhanced due diligence might take that relationship into account because you might feel more confident about the risk level. But you still need to go through the process and keep the records to prove it. Because when we carry out our inspection saying, well, I've known Bob for years, isn't going to cut it. We'll be asking for documentary evidence, not a story. So whether they're a brand new client or old friends, you still need to do the checks. On to myth 3. I just wouldn't take on that client, so I don't need to do risk assessments. First up, the firm-wide risk assessment. This is central to your AML controls. It's your foundation, your starting point, your big picture view of the risks that could affect your business as a whole. And yes, that includes you, even if you're working solo. It's not just for the big firms, it's for you. You need one too. It needs to be written down, kept up to date, and ready to show us as your supervisor if we ask to see it. It's not a one-off document either. You should be reviewing it regularly, ideally every year or two, or when something changes in your services or client base. But your firm-wide risk assessment does not replace your client and matter risk assessments. You still need to risk assess each client and each new matter to make sure that you're not walking into any unexpected risks. The firm-wide risk assessment helps you set the scene, but the client and matter risk assessments are about applying that thinking case by case, day by day. So you need to do both. It's not an either or. Let's finish this myth section with, they're not going to bother with me. They're only interested in the big city firms with the massive client lists, right? Not quite. Your size isn't what triggers supervision. Here at the SRA, we are not interested in how big or small your firm is. We are interested in your exposure to the money laundering and terrorist financing risk. In fact, some of the riskiest work in the legal sector is conveyancing, trusts, and company formations, often carried out by smaller firms or sole practitioners, exactly like you here today. So our supervision is not based on your firm size. It's based on what you do, who you do it for, and how exposed you are to the money laundering and terrorist financing risks. It's not the number of people in your office or the size of client base. So yes, sole practitioners, you are inspected too. And the best thing you can do is be compliant.
Thanks, Vicky. So up next, we just wanted to touch upon some of the good practice that we've seen from sole practitioners, and a lot of the points that we have up there are not too dissimilar in terms of what we see. In terms of good practice at much bigger firms. Now, the first point that we have up there is around tailored policies, controls, and procedures. And as Victoria mentioned earlier, documented firm-wide AML risk assessments and AML policies and procedures are required, even for sole practitioners. Now, some of the best examples we have come across are where these have been really tailored to the firm. Often the practitioner has not overcomplicated them, but has kept them quite simple and suitable to the size and nature of their practice. Some of the best examples that we have seen haven't been overly long, but they have covered off all of the key areas which are required under the regulations. Now, if you are unsure on what needs to be covered within your anti-money laundering policy, pages 18 and 19 of the Legal Sector Affinity Group, or LSAG, anti-money laundering guidance, which is the government-approved guidance for the legal industry, covers off what needs to be addressed in your AML policy. The second point that we have up there is around source of funds checks. And again, some of the best sole practitioners we have engaged with have carried out really detailed source of funds and source of wealth checks in transactional matters. Now, these firms would not just rely on what the client has explained to them, but they'd also obtain some sort of documentary evidence, such as bank statements, to really help support and verify the information the client has explained to them. Now, we often heard the same comments from sole practitioners around why they do this, and quite simply, it's because they want to do all they can to protect their livelihood and to protect their reputation. They often explain that the potential risk of acting for a criminal or receiving a fine from the SRA was too much of a gamble, so it's easier to just gather the documents. The next point that we have up there is just around training. And again, some of the best sole practitioners that we have met have undertaken regular anti-money laundering training. And quite often this was quite bite-sized in nature. So, reading articles that we have published about money laundering or articles in the wider legal press. All of the sole practitioners had one thing in common, and that was that they kept a record of any training that they've received. So, for example, where they have watched a webinar, they recorded the webinar title and the date they watched it. Now, the benefit of this, aside from being a requirement under the regulations, is that where we came to carry out an on-site inspection, they were able to demonstrate to us what training they had undertaken and when. And you can stay up to date with any sort of upcoming anti-money laundering webinars and any AML publications by signing up to alerts from us. And the final point that we have up there is just around making use of some of the resources which are available to you. And again, some of the sole practitioners that we have engaged with have made use of some of the templates that we have developed. So, for example, our firm-wide AML risk assessment template and our client and matter risk assessment templates, which they've used on their files. Now, there's no obligation on firms to use these, but they are available for free on our website, and they are designed to help firms. And the idea is that these can be used as a starting point and then tailored to your practice. And if you are unsure on what resources are available to us, please feel free to ask in the chat box and we'll be able to get back to you.
Let's take a look now at some examples of poor practice. But before I go into them, not all of these examples apply to all firms, but we don't want to see any of these examples at any firms. So it starts with a client you've worked with for years says, while you're at it, can you just handle this conveyancing or give me a bit of tax advice? You might feel like you're being helpful, keeping the client happy or bringing in some extra income. But the more you step outside your usual area, the more risk you're inviting to your door. And here's the thing, when you step into areas you're not familiar with, that's where you're most likely to miss red flags. apply wrong controls, or even unknowingly help criminals move their money. It's also a code of conduct issue. Here at the SRA, we expect you to say no to work that's outside your competence. So if you ever find yourself thinking, I'm sure I can figure it out as I go, that's your cue to pause, step back, and ask yourself if this is really in your area of expertise. Sometimes the most professional thing you can do is politely say no. Another area of poor practice is firms' policies, controls, and procedures, or PCPs as we also call them. Now, I know writing things down isn't exactly exciting, but working from memory alone is not a strategy, it's a gamble. And I'm afraid that having a policy gathering dust from 2010 with references to the money laundering regulations 2007 or SOCA is not compliant. Here is a quick reminder for you. SOCA was replaced by the National Crime Agency back in 2013. So if your policies are still mentioning SOCA or worse, the Money Laundering Regulations 2007, instead of 2017 regulations, it's probably time to blow off the dust and start again. PCPs should be up to date, not recycled from another era, proportionate, reflecting your firm's actual work and risk, and practical, something you actually use, not something you print once and forget about. Because we don't want to see a copy and paste document from 15 years ago. So please check your documents. Do they reflect who you are now, what you do now, and the rules that apply now? And if not, it's probably time to refresh these. Now let's talk about poor practice around suspicious activity. Unfortunately, there's still a lot of putting client service ahead of legal duty. And I get it. There's a real pressure to keep that client happy, to keep that file moving, and to just avoid that awkward conversation or those endless days of excuses so you don't need to tip that client off whilst waiting for a response. But here's the key thing to remember. You don't have to prove a crime. You just need to suspect that something's not quite right. And when you do suspect, reporting is not optional. It's a legal duty, not a judgment call. For sole practitioners, that duty falls directly on you. You are the money laundering reporting officer by default. So there's no one else to pass the decision to. It's your responsibility to make the call. And if there's no record, this is going to be very difficult to explain later if someone asks. So what we ask for is that you know your duties, that you spot the signs, you make the report when needed, because nothing more damaging than letting suspicious activity go unreported. So let's finish this set of poor practice examples by looking at one of the easily overlooked but carries serious consequences, and that's sanctions compliance. Sanctions breaches are what we call strict liability offences, meaning you can't defend yourself by saying you didn't know or that you didn't mean to. If you breach sanctions, even by accident, you can still face enforcement. That's why it's so important to have a clear process for checking, recording, and responding to potential matches. So you're probably asking, but how does that work in practice? It means you need to have a process for checking whether your client is a designated person. This could be an individual, a company, or even someone behind the scenes, like a trustee, a beneficiary, or a beneficial owner. And you need to be able to show your decision making, what you checked, what you found, why you did or didn't think it was a true match, and what you did next. And remember, just because someone's UK based does not mean that they are low risk. You still need to check who's behind the client, who benefits, and who's pulling those strings. So have a process, use it consistently, and document what you find.
Thanks, Vicky. So next up, we just wanted to touch upon some of the common mistakes that we've come across when speaking with sole practitioners. And one of the most common mistakes that we tend to see are sole practitioners thinking they've met their obligations under the regulations by taking a copy of the client's passport and a utility bill or a bank statement. Now, there's more to anti-money laundering compliance than just verifying someone's identity, and this includes, but not limited to, assessing the risk with a particular client or matter, but also potentially understanding the source of funds to be used within a transaction. Simply taking a copy of your client's identification and address verification documents on their own is not enough to meet the requirements under the regulations. The second point that we have up there is something that we often see, and this is where there's a bit of a misunderstanding between the terms customer or client due diligence and enhanced due diligence. And often there's a lot of confusion around what the latter means. Now, customer due diligence, or CDD, is your baseline process for identifying your customer's identity and assessing the risk. Whereas enhanced due diligence is a more comprehensive investigation, which is typically used for higher risk clients or higher risk matters. We're often asked what constitutes enhanced due diligence, and whilst there are some obvious things, such as understanding the client's source of funds, i.e. how a transaction is to be funded, and their source of wealth, i.e. how they have accrued their overall wealth, there are additional measures that you can take, such as carrying out further screening or asking for additional documentation. Ultimately, enhanced due diligence is undertaking more in-depth checks to help mitigate any risks which you've identified. And the final point that we have up there is just around work which is in scope. And this is something that we quite often see, as there can be a bit of confusion around the type of work which falls within scope of the regulations and work which is out of scope. Now, Regulation 12 sets out the type of legal services which are typically covered by the regulations, which includes, but not limited to, property transactions, both residential and commercial, but also potentially trust and company formation work. There are also some grey areas which may fall within scope of the regulations. So, for example, if you are distributing assets as part of a probate matter, this may bring you within scope of the regulations. Finally, it's also worth highlighting that some tax work may also bring you within scope of the regulations. A number of years ago, the definition of tax advisor was broadened to bring certain types of tax work within scope of the regulations. Back in 2020, we produced some tax advisor guidance to help firms with this. And I'd encourage you to have a look at this so you can see the broad range of tax services which may now be brought within scope of the regulations. A link to our tax advisor guidance will feature within our resources page. And just to really re-emphasise, if you are doing work which is in scope of the regulations, you must have the appropriate controls in place.
So after all that talk of poor practice and common mistakes, you might be just sitting there thinking, how am I meant to do all of that without breaking the bank? Well, the good news is you don't need to sign up to every expensive screening tool or subscription service on the market. There are plenty of free and low-cost resources that you can start using today. Let's start with the most obvious one, a simple web search. Seriously, pop that client's name, company, or address into the search engine and see what comes up. You'd be amazed at what's out there in plain sight. And yes, that includes those red flags. Then you've got Companies House, great for checking who's behind the business, their directorships, ownership structures, and even their financial status. And it's all there, free of charge. Don't forget the official sanction lists. You've got OFSI, that's the UK's Office of Financial Sanctions Implementation, the UK sanction lists, and even the international ones like OFAC and the EU lists. If you have a client that's claiming to be a charity, check the charity commission register. It takes seconds and could save you the world of trouble. And finally, don't underestimate open source news. A quick look of a reputable news source can tell you a lot about someone's reputation, their political exposure, or past behaviour. So, yes, compliance does take some effort, but it doesn't have to take all your budget. A few simple checks, done well, recorded properly, can go a long way in helping you to manage the risks sensibly and affordably. Enhanced due diligence, as explained earlier by Dec, isn't just more of the same. It's about going that little bit deeper when the risk is higher. These free tools help you spot the higher risk clients early on, before you've invested time or worse, walked into something risky without realizing it. Second, they give you evidence to back up your risk assessment. So you're not actually just saying you've taken that risk-based approach, you've actually got the information to prove it. They also help you spot inconsistencies. For example, if someone tells you one thing, but the public record is telling you completely something different, and that's your red flag to dig deeper. And when it comes to source of funds or source of wealth, these checks can help you build a clearer picture of where that money is coming from and whether it makes sense in the context of your client. Finally, and this is really important, they help you create a clear audit trail. You can demonstrate exactly what you checked, when you did it, and why you were comfortable moving forward. So we've all heard that old saying, if it wasn't written down, or if it's not written down, it didn't happen. That can feel a bit of an overused phrase and a bit unfair, especially if you feel like you've done absolutely nothing wrong. But here's the reality. If you can't show the record, it becomes more difficult to prove, and that makes it hard to evidence your actions if you're ever asked. And it's so tempting to rely on memory, especially when you're busy and when something feels routine and day to day. So here's a practical tip. Get it written down. Where you checked, when you checked, and what the outcome was. This could be as simple as a screenshot with a date stamp, a quick file note explaining why you took the certain action you did, or a record of any discussion you had when you wasn't quite sure of what to do. It doesn't need to be complicated, but it does need to be clear and accessible when you need it. Because when you've got good records, you can demonstrate compliance. And that's exactly what we are looking for.
Thanks, Vicky. So before we move into some questions, I thought I'd just cover off some of the key takeaways from today's session. I'm not going to go through all of these. I just really wanted to highlight a few of the key ones. The first point is just to really re-emphasise that the regulations apply to all firms, regardless of size, and that includes sole practitioners. The second point is around proportionality. Now, while AML compliance is non-negotiable, your controls need to be proportionate to the size and nature of your practice. Now, what we mean by this is that we're not expecting overly long documents. As I highlighted earlier, some of the best firm-wide AML risk assessments and policies that we have looked at for sole practitioners have been kept quite simple, but they have been tailored. And finally, the last point that I just wanted to cover off was just to ensure that any checks that you are carrying out are documented and recorded. As we highlighted earlier, it's much harder to evidence something when it's not documented. So please ensure that any checks that you do carry out are recorded in writing. So with that, we can move on to some of the questions, and thank you to those of you who have submitted. So Lex, over to you with the first question.
Yep. Thank you so much to Declan and Victoria for those interesting insights and tips. I was really pleased to hear Victoria pointing out the number of free resources out there that are available for use. Those will definitely help you comply with regulations and help you avoid doing business with someone you'd prefer not to. I was upset though, Vicky, to hear you be so dismissive about Brussels sprouts. I can't believe you went public with that. We'll talk about those later. But we'll move on now, I think, to questions from our viewers. I can see we've had some in already, but if you're out there and you're thinking you've got a question, please do make sure you use the link below. Let's keep those questions coming through, please. But first question, if you can recommend one essential resource for a time-poor sole practitioner to look at, we would be very grateful. Declan, can I throw that one to you, please?
Yeah, of course, yeah. So, we have produced some very high level sort of basic guidance around what firms must cover, and that's covered off on our website under anti-money laundering, getting the basics right. And like I say, this covers off some of the basic requirements around the types of firms and need to do what they need to do to comply. For more in-depth guidance, I would suggest taking a look at the LSAG anti-money laundering guidance. As I mentioned earlier, this is the government-approved guidance for the legal profession. And I mean, this document is over 200 pages long, so the expectation isn't that sole practitioners sit there and read the whole thing, but you do revert to any sort of relevant sections which you may think are relevant. So, for example, if you needed further guidance on client due diligence, there is a section in there that you can have a look at and the types of documents that you may want to accept.
Thank you. Okay. Next question then. As a sole practitioner, are there exemptions? Excuse me. Are there exemptions in terms of what we're required to do under the regulations? Declan, I'm going to come to you for that one as well. I think you talked a little bit about it earlier.
Yeah, I think, yeah. So just to really re-emphasise, the regulations apply to all firms, including sole practitioners. And if you are doing work within scope, you do have to adhere to the regulations. The only notable exemptions I can think of are things like carrying out an independent audit if you are on your own, given the sort of size and nature, and appointing a money laundering compliance officer, given that you will hold this role if it's just yourself. You will hold that role anyway. As I highlighted earlier, any documents that you have should be suitable to the size and nature of your practice. And what we mean by that is, so for larger firms, we would expect a much more thorough, firm-wide AML risk assessment, as opposed to what we would probably expect to smaller firms, given that, bigger firms have different risks, broader range of clients, perhaps offices in different locations, etc. That being said, it doesn't mean that we would accept poor quality documents from sole practitioners. They still need to meet the requirements of the regulations. So if you are unsure on what needs to be covered, do take a look at LSAG. Just circling back to the independent audit point, obviously we would always encourage firms to have an audit. I think there's always good practice to be done with that. But if you are just on your own, it's slightly different to what we would probably expect than a firm where there's a lot more fairness.
Okay, thank you. Our next question. Okay, so it's a reasonably long question. And Vicky, actually, I think this one's probably going to come to you. As a sole practitioner, we're often dealing with local customers who've never used a solicitor before. And the example they've given is an elderly person wants to sell their house to downsize, but doesn't have any formal ID, so they're not going to pass the usual sort of money laundering checks that we would do. What is the firm meant to do in this instance?
Okay, so this is a common situation that many will recognise. What I would say is that you need to take a proportionate risk-based approach. So where traditional ID isn't available, you can rely on alternative documentation such as government correspondence, pension statements, or bank records from a long-standing account. It may also be appropriate, if that person is in a care home, to probably get a letter of assurance from the care home manager or GP who has knowledge of the client. But I think what's important to remember is that the purpose of the money laundering regulations is not to deny people access to legal services for legitimate transactions, but to ensure that we are managing risks and preventing misuse. So the focus should always be on a clear risk assessment, appropriate evidence, and our well-documented decision making.
Okay, thank you. Next question here is on source of funds. I think it's something that concentrates a lot of our minds. Declan, I might come to you with this, and actually, it's two for the price of one. So we'll do it in two parts. But the first one, do you need to do source of funds investigations even if you are providing a legal service such as criminal representation and not sending monies on to any third parties?
So with that one, typically, no, you wouldn't need to do source of funds checks with that one. If you are providing legal services, presumably the criminal representation, presumably the only funds you'll be receiving are the legal fees. So no, you wouldn't need to do source of funds checks in that.
Thank you. And then the second part of this question, if I am engaged in litigation, I receive payments direct from defendants in settlement of claims. Should I be checking the source of these funds?
So typically, litigation matters wouldn't fall within scope of the money laundering regulations. So the short answer is potentially no, but you do need to be aware of things like sham litigation. If someone was quite keen to pay quite quickly, out of court, etc., and there's any red flags around, you may consider that to be sham litigation, and you may choose to potentially look at source of funds then. But typically, litigation matters, no, they would not fall within scope of the regulations.
Okay, thank you. We've got another question. This one's on tax. It's not a 4-letter word, it's a 3-letter word, but it's just as terrifying. Tax. Is this type of work in scope? What kind of tax work might be brought within scope? Dec, I know you talked a little bit about tax earlier. It gives me the chills. Do you want to take this one for me?
Yeah, sure. Yeah. As I mentioned earlier, the definition of tax advisor now is quite broad, and any firm that is providing a service that addresses or might impact the tax affairs of a client, you should carefully consider whether or not that is in scope of the regulations or not. Our guidance gives plenty of examples of the types of work which may be brought within scope. So, for example, there's a probate example within the guidance where it talks about, if you are explaining the tax consequences for those inheriting assets, or you're tailoring any arrangements to a beneficiary's tax situation, that may bring you within scope of the regulations. What I would suggest is have a look at the tax advisor guidance. A link will feature within the resources page that outlines the various sort of types of tax work which may be covered off within the regulations.
Okay, thank you. And then another question here. I think, Vicky, this one's probably going to be for you, actually. Do you have examples of what you mean about taking on work outside of your competence?
Okay, so a typical scenario might be a sole practitioner who usually handles family law. At the end of a divorce matter, they deal with a transfer or sale of the family home themselves rather than referring it to a conveyancer. But because property isn't their usual area, they may miss red flags like unexplained third-party funds, unusual ownership structures, or lack of source of funds verification. So it's a good example of how stepping outside of your core area can increase those risks of missing essential due diligence. I think the best way to prevent this is familiarise yourself with the types of work which is in scope of the regulations, and understand what is expected of you. There are resources out there to help you, as Dec has already mentioned, the LSAG guidance. There is a section in there, Get the Basics Right. There's an article that mentions all those areas.
Lovely, thank you. Okay, we've got one here on. Okay, so if the work we do is not in scope of the regulations, is there an obligation to undertake a risk assessment on the matter? Declan, can I throw that one over to you, please?
Yeah, sure. Short answer, no. If the work's not in scope of the money laundering regulations, you don't need to carry out a anti-money laundering risk assessment. We would always, in best practice, you may choose to do so, just in case, or if the work suddenly moves into a regulated area. So, for example, as part of the same matter, you start providing tax advice, which may bring you in scope. At least you can evidence to say that you have carried that out. But short answer, no. If you are doing work which isn't in scope, then no, you don't need to carry out a client or matter risk assessment.
Fair. Okay, thank you. Admirably brief as well. No. So we've got one here on technology. All Luddites should look away now. That might include me. But would software be adequate to carry out AML and compliance checks? Declan, any thoughts on that?
Yes and no with this one. It's a difficult one. So obviously there's a lot of different sort of software around now that can really help with anti-money laundering checks. Obviously we don't endorse any at the SRA, and likewise, we don't say you have to use software, but there are a lot out there on the market which can help. What I would say, software isn't a substitution for carrying out things like client and matter risk assessments. A lot of the software that you can use now, they will help towards your assessment around sort of client and matter risk, but they shouldn't be used in place of. You will need to have that human element to it to make your assessment of the money laundering risk attached to a client and a matter. So yes, it can certainly help software, but it shouldn't be used as a substitution. You can't just fully rely on it. On top of that, what I would say is any software that you do use, you need to be confident how it works and comfortable with the risks attached to it, which you should probably bring into your firm-wide risk assessment, just so you're aware of what the limitations and stuff are.
Yeah, I think that's a really good answer. I know technology is often suggested as the sort of the panacea, the cure for all ills. But ultimately, you do need to, as Declan said, you need to understand its the risks attached, but of course also the limitations of it. Because ultimately, it's not going to be this third-party firm that's built you a software package that's going to have the liability for you failing your AML obligations. It's going to be your firm, so you do need to really make sure you've understood what it can do, and crucially, of course, what it can't do. We are back to source of funds, but this one's slightly different. Vicky, I might come to you for this one actually, please. It's a quite long question, but so I'll read it out. In family law cases that are private and legal aid, do we need to obtain source of funds for private clients if the fees are not being paid by the client? Does the client need to pay any money from their own bank, or can third parties pay monies for them?
Okay, Lex. I'll probably deal with that step by step. So in family law cases that are private and legal aid, so in relation to obtaining source of funds for private clients, if the fees are not being paid by the client. So if they're coming from a third party funder, like a family member, then it is best practice, because third party funding is classed as a high risk matter. So it is probably best practice to carry out some due diligence of where that money's coming from. If it's coming from legal aid, obviously that's to pay fees for the family matter. So that's you don't need to obtain source of funds because it's coming from the legal aid agency. But yes, in relation to source of funds, it depends if the money's come in to pay the bill or whether the money's come in to deal with the settlement. Because whilst family matters are actually out of scope, there are legal aspects of family units like divorces that might create tax implications. So particularly income tax and capital gains where ownership or assets are being split or transferred. The creation of trusts to manage asset transfers to children will likely have tax advice service elements. So it is dependent on whether it is simply just to pay fees or it is for the financial settlement within family law. So I think when it comes to family law, you really do need to look at the tax advice to see whether the family law comes into scope or not. And if it does come into scope, then you do need to look at source of funds and where those funds are coming from to deal with that financial settlement. I hope I've dealt with all those points of that question. If I haven't, please let me know.
It was quite a lengthy question, but yeah, thank you very much. We've had one in on training. Now, so I am just going to say we did do a training thematic last year. You can find it on our website. But I will read out the question, and then Declan, I think I'm going to come to you for the answer. Is it a requirement that sole traders or micro firms must attend third-party training either via Teams or in person? Are SRA webinars or similar sufficient? Obviously, the SRA webinars are amazing. I may be a little bit biased. But Declan, your thoughts on that one, please.
Yeah, perfect. And Lex, yeah, you took the words from my mouth. We have done a training thematic, so again, a shameless plug for that. So please do take a look. But in answer to the question, no, there's no requirement to undertake third-party training. There's a lot of free resources out there. Training's an ongoing thing. There's a lot of things that can feed into training, webinars being one, articles we publish, the various different sort of thematic reviews and stuff that we release. That all counts towards training. As I mentioned earlier, some of the best sole practitioners that we had spoke with had undertaken sort of regular training, but it was all quite bite-sized. It was all, things that were out there in the public domain, and they just recorded when they'd when they'd read it or when they'd watched certain webinars. So in answer to the question, no, don't need to attend third-party things, but the key message is just record any webinars or anything like that that you do watch, as that will count towards your training, and it will help evidence to us that you have had regular training undertaken.
Okay, thank you very much. I'm just having a quick look to see if we've got any more questions coming through. We've got one on cash payments. Do you need to check source of funds for cash payments? Cash payment or solicitors fees, excuse me. Declan, how about I ask you for that one?
Yeah, I mean, again, it's any fees and stuff typically wouldn't, fall within under the money laundering regulations. I think the one question to ask is if you are being paid in cash and it's quite a substantial amount, is to probably have a bit of an indication around why you're being paid in cash, and what I would suggest is you have a policy yourself around any cash acceptance. Some firms have different amounts. So short answer, no, you wouldn't need to check the source of funds, but you probably just want to, have a potentially a limit that you'll only accept a certain amount.
Okay, lovely. Thank you. I think that is probably bringing us to the end of questions now. So I will just say a big thank you to Declan and Victoria for their time, and a big thank you, of course, to you, our audience, for joining us today. We've heard quite a lot about the myths that we encounter, how to avoid some of the common mistakes that we see. We've heard that Vicky doesn't like Brussels sprouts at all. But in all seriousness, this webinar has been so important to us because we really want you to do well. We want you to continue playing a key role in making the UK a really hostile environment for anyone who wants to commit economic crime. And let's face it, compliance is absolutely going to help you do that. I know we covered an awful lot in this session, so if you do want more information or to look at any of the SRA guidance we mentioned, all the links to the resources will be included on our website. You can go to the events on demand page, and you can also watch this session again. You can share it with colleagues and peers and so on. We would really like to hear your feedback. So if you could let us know what you thought by clicking on the feedback link in the video description, that would be massively helpful. It will, I promise it's short, so it'll only take a minute or two, and it will definitely help us improve what we do. I will say as well, suggestions for future topics will be very welcome. And if any of you want to be an SRA star and come and join us on one of these webinars, that would also be great. Please just pop your contact details in there. We would love to hear from you. Otherwise, I will say thank you so much for watching. Don't forget this webinar will be available today to watch on demand, and all the links to all the resources will be available at sra.org.uk. Otherwise, I will just say thank you again so much. I will either see you on a future webinar, or of course, I'll see you at the Compliance Conference later this year. Thank you.